Hi, this is Don Goldberg for Focus Washington, sitting in for Chuck Conconi. This week, we're in Houston, Texas, meeting with Mike Loya, President and CEO of Vitol, Inc., one of the world's largest physical oil traders. We're down in Houston, Texas today with our friend Mike Loya, once again to talk about what's going on at the gas prices at the pump and to find out what we should expect for the rest of the summer and into the fall and winter seasons. Mike, great to have you back.
Good to be here.
So here we are halfway into the summer. Prices have gone up a little bit from when we talked last time before Memorial Day. Are prices moving about the way you would expect it, or what's happening in the market that surprises you?
Well, that's a really complex question because basically prices are reacting to a lot of things. Demand, it is the summer season, so we have more demand for gasoline. But at the same time, there is an abundant supply, especially on the crude oil side. So that has been a greater supply. So trying to balance the two is what price does. And what we've seen in this summer has been the prices have gone up, relatively steady. I think mostly because of a perception in the marketplace that the economy is recovering, therefore there's going to be more demand. I think now as we come along in the summer, we see that perhaps there's plenty of supply, so therefore there's no that worry or that anxiety to try to buy future supply. So prices are stabilizing.
So prices have gone up a little bit since Memorial Day, but do you think they would have gone up a lot further had the economy really been recovering more, or there'd been some of this more angst in the markets?
Oh, without question. I mean, markets anticipate what future demand is going to be, as well as supply, of course. But with the recovery in the economy, would have had more driving, both not only in gasoline we're talking about, also in distillate being diesel, road diesel for fueling the trucks, and it's a very big indicative of the economy or economic activity, and that would have been even higher. So therefore, I think the great demand on both of those products would have driven prices higher.
So where are we with the economy now as far as the market, the oil markets perceive? On the one hand, there seems to be a stabilization in the stock markets, which is a good sign, and a lot of economists are saying we're just about going to turn around. On the other hand, we have this high unemployment, so there's a little bit of schizophrenic activity. How does that impact where the market forces driving the oil industry?
Okay, well, we have to be careful that when you talk about oil prices, they're driven both by supply and demand. Now you're talking about the demand side. And demand side, of course, the economy and required fuel to propel the economy forward is on the demand side. On the supply side, you're talking about availability of refineries to make the product, which in this case is plentiful. That is both the products and the availability of refineries. But at the same time, you're also talking about the availability of crude. Now, crude has been plentiful coming into this driving season, but at the moment we're seeing a decline in crude oil inventories. Now, we're declining from a very high level, which means that how much is that going to translate into future higher prices? We just don't know. But at the moment, we're trying to see, or we're seeing the market trying to find a balance. And as you alluded to, the economy is a big question, but also let's not forget the supply side as well.
When the economy does turn around, what's that going to mean for the supply side?
Well, I think that the oil suppliers, perhaps OPEC in this case, is trying to manage supply a little bit better for themselves, obviously. But when you say pent-up demand, depends how fast the recovery is. If we have a V-shaped recovery, which I don't think anyone expects, we should see a big increase in demand, and therefore that should reflect in prices. I think myself, you read different stories about how the economy is going to recover, when. I don't know any more than what I read in the newspapers, but my feeling is that if we see a recovery in the demand for gasoline, and therefore in prices, it's going to be a slow, steady one, and not anything where there would be considered a spike or a sudden change.
Well, let's turn to the fall real quickly. So summer season's going to be over in 6 more weeks. Then we get in the fall where there's perhaps less tourist travel and aircraft travel, everything else. On the other hand, then you've got heating needs go up and home oil supply needs go up, and the refineries need to make a different mix. How are the markets factoring that in, and what do you think is going to happen in the fall, or is it hard to say?
Well, in the fall is one of the slow where demand drops. It's one of the slow seasons in demand. Now, how's that going to be absorbed by the market? Well, the market already anticipates that. So at the same time, it's a time to build inventories for the winter, you say, especially for heating oil and natural gas as well. But right now, we're leaving the summer, or at least we're in the middle of summer, but as we leave the summer, expectations are that heating oil is going to be plentiful. not only in the availability, but also in the inventories. Inventories are high, not only domestically in tanks in the U.S., but around the world, and floating on tankers, because it's economically profitable to do so. And therefore, there's going to be plenty of supply for this winter. Same thing with natural gas in the U.S. There's plenty of natural gas.
Well, Mike, thank you very much. It's always a pleasure to have you here, always very insightful. Thank you very much. This is Don Goldberg for Focus Washington.